all, good afternoon. You're watching Closing Trades in ET now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the market is holding on to good gains because we are staring at 23,250 thereabouts on the index. It's the biggest single session gain that we have seen on the Nifty in as many as 40 months. The BSE market capitalization has added almost 12 lakh crores to its kitty, and the total BSE market capitalization is northwards of 424 lakh crore right now. The PSU banking index, that's clearly firing away in the trading session. That's managed to see a gain of 8%. It's the highest that we have seen in 10 years. So the last time the PSU index was up almost 8% was back in September 2013. And since then, it's the biggest gain that we have seen. And of course, names like Canara Bank, a BOB, a PFC, REC, SBI, name any of those lots, they are making fresh record highs right now, even including the likes of Power Grid as well as NTPC. But the good news is India VIX has taken a slide as was expected. So it's taken a slide of almost 17% on an intraday basis. But the advanced decline ratio is not as robust. It's yes, healthy at 2:1, but there's not just a one-way move that we are seeing. There are pockets which are in the red. And those pockets largely belong to pharma space as well. So pharma is clearly underperforming. Yes, all sectoral, all sectors are in the green. But pharma names like Marksons, even other names from the entire pack are a bit under pressure. Names like Fortis, etc. These are the ones which are in the red right now. So overall, a great trading session for the bulls. But the big question is, Aisha, does it sustain from here on? And what happens tomorrow when the final verdict is out?
Oh, absolutely. Do you see any signs of a profit taking come by once the actual verdict is out tomorrow? The counting, remember, is going to begin at 8 a.m. and you can tune in to us right here on ET now at 7:30 a.m. tomorrow morning. But that aside, for now, you're not really seeing any signs of this move in the market abating. We started off gap up 3% and we've largely held on to major chunk of our gains. GAIL holding up 13%, REC up 12.5%, PFC up 12%, BOB up 11.5%, Adani Ports up 10.25%, SBI now almost counting down to a 9% move, NTPC, ONGC, Adani Enterprises, BPCL. The rally, pretty much across market caps, that's both large as well as SMIDs, that's clearly intact in trade. But let's take our discussion forward. We've got CA Rudramurthy joining us. Shortly, we'll have Kunal Bothra as well as Sameer Arora to join in on the show. But Rudra, if I could start off with you, of course, a re-rating moment, so to speak, for the index. What's next in store? Do you think some consolidation is coming? Do you think some profit taking is going to happen? Or do you sense a follow-through?
See, as a very short-term trader, risk-reward has to be in your favor. And after this exit poll verdict and also the market's move today, going long here definitely is not advocated, especially if you're a short-term trader. I'm not, in fact, sounding bearish. I was very, very bullish even before the event. And especially for PSU stocks, I was saying it is a decadal rally. And whatever we have seen in last 1.5 years is just the beginning. But one has to understand investment and trading are two different ball game. And as a short-term trader, yes, you have to take profits which is available to you if you are on the long side and if you were on the long side before the event. And I will definitely not advocate for a short-term trader to buy at these level. Let us see what happens tomorrow. And if for any reason we see a big thumping victory of 400 plus seats to NDA tomorrow in the actual counting, I will be not surprised to see another leg of an up move. And from there on, second half, we might see some amount of profit booking. So for me, this is not an area to freshly take long positions. If you have long position and as a short-term trader, definitely book some profits at these level. Wait for all these news to come out and then see clarity and then take fresh positions if you are a short-term trader. If you are a longer-term investor, next 5 years, do not worry. Buy good quality stocks. Hold it. India shining story is on.
It's definitely on, and we're shining bright, surely. Kunal, what levels do you now monitor both on the Nifty and the Nifty Bank? And any signs of consolidation or profit taking? Or do you think we'll continue to hold out because even the global markets are?
No, so we may not immediately hit a consolidation, but we should probably hit a much more higher trend as well as a trajectory for both the Nifty and the Bank Nifty. Now, what generally happens is when the VIX tends to cool off, which is an ideal scenario for the markets once the event is out of the way. I think in that sense, the inertia move for the index continues. So this time around, since the breakout is on the upside, we would expect that over the next 3-4 days, assuming if there is nothing, no major negative news flow around, then I would believe that the index should come back to the next psychological mark, which is 23,500 for the Nifty, and potentially I think 51,000, 51,500 for the Bank Nifty. So I think what we should be looking out for now is to try and just solidify the returns what one could probably have achieved today. Try and add up more large cap names. I would still believe large cap stocks like HDFC Bank, Axis Bank, IndusInd Bank. I think they still look very attractive from a short to medium term perspective, even from current levels. And add to that fact the other heavyweight Nifty names, L&T, Reliance, etc.
Okay, point taken. So that's the view on the market. But let's welcome on board Sameer Arora as well, founder at Helios Capital. Sameer, hi, good to be speaking with you. I'm sure you're happy today looking at the portfolio, as is I think rest of the viewers as well. If you're a bull, you are all smiles ear to ear right now. But do you think this is expected to last? Because do you think this is just a short-term, euphoria that we're seeing in the market, or do you see that the duration could be longer as well of this euphoria?
No, it will be longer for sure. First is that today you are looking at it as if the market is up 3.1%, and I am looking at it as if it is up 1.5%, because every other Asian market is up 1.7%. Whether you look at Hong Kong, Korea, Taiwan, all of them are up 1.7%. So if they can be up 1.7% without any new news, we can be up 3.1%. Which means additionally only 1.5%. Just joking, but the bottom line is that this is a big event, and the FIIs who have been selling for the last few months are not going to sell like this anymore, and therefore you will be in a sweet spot where domestic guys are buying and foreigners are trying to build back their positions. They are not, forget about if they have sold and are now buying back. But there will be many investors who are waiting for this event to be out. Why did they want this event to be out? Because that's just the nature of these institutions who don't want to be embarrassed in month one that they thought of something and then something else happened. So they try and cover all their angles, and because of that, they generally
policy continuity, and that should give a fillip to the FPI flow. So in that regard, Sameer, 25,000 on the Nifty before Diwali or maybe year end?
So 25,000 means how much percent? I talk in percentage. I never exactly even know what the level of Nifty is. I talk in percentages. And in percentages to make, for at an index level, Nifty might do a little less well than say 500, but broadly, plus minus. But broadly speaking, to make 10% from here to year end is not wild. Yeah.
Okay, so it's 25,000 is just
what
about
happens is
7%.
that today-
So 10% is a good margin of safety there.
Yeah, it's a very good number. It's up around 10% so far this year. I'm talking about the 500. And so another 8-10% can easily happen. And I think a large part of that might happen this month. I think this month will be up another 3-4% till the month is over. Then budget time, there'll be nervousness if they are, if the BJP gets or the government gets overconfident and say that let's put in some capital gains, tinker around with some of those things, that may be a bit of an overhang which we'll have to overcome. But otherwise, yeah, it's good.
So Sameer, how is it that you make the most of this next 10% move, which you're so confident about? I mean, is it fair to make a demarcation now, invest more in large caps, profit take from SMIDs, because they are the ones which have already sort of ballooned up and people are questioning the valuations that some of those are quoting?
So, the first level obvious moves have happened today, which is PSU and some investment related and infra related. And therefore, we come back to this sector we have always had, which is financials. Because, see, there are two groups. One is the Indian economy related, reforms related, policy related. And those are the ones which are going up today. And then there are those which were anyway doing badly and will not be in any way positively affected by the fact that BJP government has come back, which is the IT sector or anyway a little bit of the pharma sector, because those are A, unrelated, and B, relatively therefore will do badly, and they are. And then there is the third sector, the financial sector, which doesn't have direct implications, or the policies don't have direct implications, but they end up being connected with everything in life, whether it's the Reserve Bank of India giving a high dividend, or the fiscal deficit being lower, or anyway growth in various sectors where they can do some form of financing, and which has not done well recently, but historically has done well. And so we think financial sector is good. We are putting our investments in that, in the sense that it's already the biggest weight in our diversified funds. And we have even launched a financial sector fund. I'm not plugging the fund, but I am plugging the fund, in the sense it is what it is. The sector has underperformed recently, but otherwise a good sector, and it has all the things going for it. And it is the biggest weight in our fund. So we are not randomly saying that it's a good sector.
Right. We'll talk about your financial services fund in a moment. We'll be curious to know more about it, that how are you playing it differently. But one particular stock out of the banks, HDFC Bank, does it start to look even more attractive now that all the other peers are up 10-15% higher, and this one has tested the patience for the longest time for the largest?
We consider it a high confidence in reasonable return kind of stock. And actually, it has one more thing going for it, which I think yesterday or day before yesterday, again, Macquarie pointed out, which I knew for some time since I'm tracking it, is that in this quarter, if the stock has been sold more by FIs, maybe after today they may not sell or because of unrelated events, but if HDFC Bank has been sold in this quarter, even 5 basis points, that means 0.05% total, then the stock will meet the MSCI requirement for coming into the index with full weight, and that itself is worth $5 to $6 billion of buying in a single stock, even if the bringing it into the index is done over, say, 6 months or 1 year. Even if people know that over a year, the in 4 quarters like they did when removing it, so it has technical issues, plus it has underperformed, plus it is growing at least 12-13%, which half of Indian companies are not growing. If you look at the IT guys or the consumer guys, most of them are with great difficulty growing 8-10%. So it meets all the requirements now. We have always liked it. In general, it's always been good, except in the last 1-2 years, it's done sort of miserably, and therefore, but we haven't given up. We give up on many stocks, we don't do well. It's not that we keep fighting the world, but this one we like.
Sure. You're just explaining the rationale at the current juncture. But Samir, what about the financial services universe beyond lenders? Are you researching and approaching them as well?
Financial sector has many components now. So, it has wealth management and NBFCs, and it has brokers, and it has stock exchanges. So one other thing that we are nervous about, and we now have very little, if you call some broker maybe, is the fact that there might be a clamp down on futures and options trading. And that I support. In the sense that they have to bring it down. We can't have this kind of speculation to this extent. But how the government can do it or SEBI can do it is, I guess, they can't ban it. So the only way they can do it is make it unattractive, rather either by increasing STT on it, or increasing margin, or making it available only for somebody who's called accredited investor or something. And that makes one part of the financial sector a little bit risky, which is these gatekeepers, which is basically the exchanges and brokers that rely a lot on options. Other than that, every part of a financial sector is good big picture, because there is a lot of under-penetration of financial services in India. If you look at mortgages to how many households have, or penetration, or divide by GDP, or you look at credit cards, or you look at mutual funds. And in general, if you had looked at brokers, but this one angle is there, and banks, and then normal NBFC. So there are many parts to the financial sector beyond just the banks. But the banks themselves are very good, both private and public.
True that.
And
But Samir, what's the view on Modi's stocks? Are you of the camp that the glass is half full, that they've run up already, or is it half empty, that they have long runway to go in terms of PSUs, in terms of defense, manufacturing themes?
So we have all the PSUs that we can lay our hands on. Quite a few of them are weight in the larger diversified funds would be maybe 35%. We checked that in the mutual fund industry, at least, because it's not easy to get these on foreign funds. It's about highest is somebody in the 20s. So we are very high in that. And that is today's like we are raking it in. But I would think that this needs a bit of execution and delivery now. So now it will depend. All the PSUs cannot go up from here. I mean, unless they really do dramatic reforms and across the board things. So it will become tougher because the absolute valuations are high. But even today, we bought one PSU, by the way. But in general, I would think that now in this, even though we have large weightage and we will run with it for some time, now it will be important to see exactly what the government does on these things. So it is not as obvious as buying, say, 6-8 months ago on the basis that this thing will happen today, which is what has worked for us in our funds.
You got it so right with affluent consumption, right? Be it your call on Zomato around those 40 odd bucks, or for that matter, even ITC when the entire street was not ready to look at it, although ITC is more addiction than consumption. But you think, this aspirational Indian consumption stories or premiumization trend is here to stay?
It is here to stay, but it is more confusing than obvious stocks being there. For example, I think that the consumer staple guys, people say that there's no rural pickup and there's a divide between the rich and poor, and therefore these mass consumption things are not going. I think that one reason for that could be that those guys are also aspirational. So they are not as excited in buying a slightly higher quality soap or a higher quality noodle, because that they are consuming in their home, but they want to do something visible to the world. And that is why they may be spending on mobile phones or smartphones or Instagram or shoes or t-shirts that they can show on social media. So it's become quite confusing. So we have the consumer, but basically Zomato is not aspirational or something. It's more convenience related to the fact that people have more things to do now. Plus the traffic is a problem and you want to see Netflix, and there are so many unconnected things. Plus, of course, in its new avatar, it is a fight with the Kirana guys, and this is much more efficient, available for longer hours, and you can get more things. And the Kirana guy might also be able to deliver, but there is no downside in it being delivered from Blinkit or something. So I would say aspirational, and the premium consumer story is there. But the biggest story right now might be oil and gas and state-owned. As I said, it needs a little bit of policy reinforcement. But
just about to come to you on that one as well. Just some flashes coming on the screen. Vedanta Group is saying that they are aiming at becoming a net debt zero company, and now there are some special situations playing out in some other stocks like the Novelis listing as well in Hindalco. Have you approached this space, the entire metal and mining space?
So at least in the first case, we may do these things, but we do them in stocks that we otherwise would be willing to buy. Some stocks are considered untouchable because our memory is long. And as you know, we keep saying that there are so many stocks that do well that we don't have to poke our head in every stock that is moving up, because some of the things we are broadly, principally against that these companies have done, or this company has done.
Right. No, that's true. I mean, there is a part of the market which is not very comfortable with so much of restructuring, demerger, merger, and then putting them back. And so they are confused what exactly is the business model here.
History. Not argument.
Sure. Okay, I'll come back to that point, because now you are running a mutual fund yourself. You understand the economics of running a mutual fund. I mean, some of our friends in the industry say that the margin in this, always are under constant regulatory pressure. How would you see approaching, if one were to take part in, whether via the wealth management companies or mutual fund companies, which have better size and scale and scope of higher margins over the longer term?
Management is a better business simply because when we sell a mutual fund, the management fee is, as you can see from the difference between direct and regular class, that the wealth management firms keep more than half, 60% maybe of the fee, or even more sometimes. So, and they don't have the same regulatory issues. They don't need to keep risk officers and compliance officers and all that. So they are better off. But it's a good business to be in separately because of the fact that the size of the market is increasing so much, and ultimately there are only 40, I think 6 or 45 mutual fund companies. I think we are the 45th or 46th. And already by AUM in equities, we become some 38. So actually, there are only 45 companies, and some of them are doing very badly, and some of them are very big, so they don't have the same flexibility in terms of managing, like a $10 billion fund. How can you maneuver it so easily? So therefore, there is a sweet spot for the slightly smaller but otherwise equally experienced guys.
Amir, on that note, we let you go. Appreciate you making time and speaking with us. Hopefully tomorrow is another good day for the market and there's perhaps more upside. But for now, the upside has been fueled by Reliance Industries. That stock has hit a fresh record high as we speak. It's, I think, come off a bit from there, but nonetheless, that stock is higher by 5.5%. So there's a solid gain on that one, and that alone is contributing 135 points to the Nifty upside. Don't forget the kind of push coming in from SBI. That stock is up a solid 9%. Crossed the market capitalization of 8 lakh crore rupees. L&T, ICICI Bank, HDFC Bank, they're all batting for the bulls today.
Anisha, the buzz on, I'll say in lighter vein, Reliance Industries stock had a major FOMO this morning.
Yeah, totally.
Because of course,
PSUs were clearly just outshining
after
it,
the
right?
Italian party and they came back and they saw
after the news that some other group actually came in the higher market cap. So they had to the stock had to do something. And look at that 5% move coming in, reversing bulk of that.
That's just fun.
Yeah,
It's not backed by facts.
Sure.
No, but nonetheless, everything is added to that BSE market capitalization, which is of course at record high level. 425 lakh crore is what it is nearing at. We are tracking that as well. But let's take a quick break while we can. When we come back, we'll take the discussion forward with Pankaj Murarka as to what they are doing at Renaissance Investment Management.
Pankaj Murarka is also joining us from Renaissance. Pankaj, how was your day? Your portfolio has all come back to all-time highs, getting calls from clients or not quite?
Absolutely, Ajay. Can't be better. Can't ask for more. Indian economy is doing very well. We've had the fourth quarter GDP numbers, which has been a big surprise. And now we have history in the making where you get third successive clean government with a full majority and probably accelerated reform. So I think can't ask for more. It's surely a sign of things that all of us should expect to come in days and years to come for all of us in India.
Put your incremental capital, because a lot of I've been speaking with a lot of friends like you who manage money professionally, and they had a section of the investors who said, no, I have to invest incremental money, but let this event be out of the way. Now that money starts coming back, would you find it a little, kind of challenging to deploy that, because valuation has completely, got risen across the market right now?
Not really, Ajay. Meaning I have a slightly different take here. I think the good thing is the election outcome is what was expected, so there are no negative surprises here. And while all of this was to a significant extent baked into the markets because of markets were expecting the outcome, what it really does is it ensures continuity of policy reforms and a stable government over the next 5 years. So what we should really look forward to is probably very accelerated reforms, because the same government comes back and for a third term, which we haven't seen in India for a very long time, which effectively means that the government will start hitting the road on day one itself. All of us know that the government already has a 100 days agenda of accelerated reforms in place. So we probably should start seeing policy actions on that count. So all I'm saying is, for someone looking from a slightly more medium-term perspective, valuations don't look that expensive in that context. Probably their markets at this point of time are fairly priced, but in the context of the growth and stability that India offers over the next 5 years, I still think this is not a bad time to invest. So, and we have enough ideas to invest. So I don't find myself as an investor being short of investment ideas.
An insight into what those investable universe or those ideas are right now? Is it more of those manufacturing, defense, capital good, industrial themes? Or is it now getting a lot more broad-based into, let's say, rural recovery, the underperforming sectors like financials, FMCG, IT also?
So, well, as you rightly said, Anisha, it's very apparent over the last few years, and I think that trend will continue, that India's growth over this decade will be driven by investment cycle, and which is where we've seen central government capex has already gone 3x in the last 4 years from where we were pre-COVID to where we are currently already at about 12 lakh crores, and probably government there are already noises about government increasing the allocation to investment allocation in their budget expenditures. So clearly, all those sectors that we talked about relating to manufacturing being driven by China Plus One or industrials, defense, and will continue to drive or lead growth in the economy. And as a result, those sectors will deliver, or companies in those sectors will deliver much higher earnings growth than the aggregate earnings growth. Having said that, we have the opinion that probably we are seeing early signs of recovery in rural India as well. We've had a cyclical slowdown in consumption over the last 12 months, but I think probably we should have a good monsoon this year, and probably post that during the festival season, we should see a cyclical rebound in consumption as well. When it comes to portfolio, so obviously we continue to remain overweight on industrials, defense, and manufacturing. But at the same time, my view is that some of these underperforming sectors like IT will come back, because we continue to remain very positive on global economy and global IT spend. So we also think that IT will come back, and financials ones, which has been a laggard, should also start performing from second half of this year.
Talk to you about that point which you just made, the consumer. If indeed, the big commentary coming in from all the four large players in consumer side is any guide, have you started adding some of those names in your portfolios or not yet?
So we are adding consumer discretionary. We think we want to play discretionary spend because we think growth there will be much higher. And we have seen, as I said, because of the slowdown in the consumption of the last 12 months, that sector has been adversely impacted, and stocks actually have are down about 20 to 40% across the sector in the last 1 year. So probably yes, on the consumer discretionary side, we've started nibbling, and probably we intend to probably gradually build our position across consumer discretion. So that's one sector which we segment which we like within the consumption, though we want to avoid consumer staples, because as I said, we can find higher growth, much higher growth in other segments of the economy.
Okay, point taken. But Pankaj, what's the view on the Adani group of stocks? Clearly, they are firing away, have managed to hit the market capitalization that was even higher than that Hindenburg time. What's the way forward for them, and what's the best bet within the pack?
Well, we do not have exposure to the group, I must say. Having said that, when you look across the businesses, they're at the core of the economy across the key sectors of the economy, which are the growth drivers, including ports, infrastructure, energy, power, and so on and so forth. So obviously, the across the board, the companies have done exceedingly well. But as investors, we like companies which pursue organic growth, and companies which do not take too much of leverage on their balance sheet while they execute their business. So while we are focused on growth, but we like conservative companies within that. So we do not have exposure to Adani Group.
Pankaj, hi, afternoon. Well, the one pocket which is really flaring up today has been the government-owned oil and gas names, right? I mean, I'm just looking at GAIL, ONGC, OMCs, the entire pack is a buzz. Is that a space that you're looking at?
Absolutely, Aisha. I think one, obviously, there's been a strong earnings tailwind in the sector. More importantly, there's been expectation that probably one of the big reforms that this government can actually execute is bring auto fuels under GST, because that's one big segment of the economy which is clearly out of GST. And if just in case if that happens, I think probably all of these stocks have a significant room to rebound from. The whole sector will see a big valuation re-rating. Aside of that, I think valuation in the sectors are still significantly low, and probably the sector is having a strong earnings tailwind. Different segments of the segments of the sector are doing well. For example, we're in an upcycle in global refining, so refining margins have been pretty healthy. Retail fuel margins for OMCs have been pretty decent. Oil prices have been holding firm, so that's helping the upstream companies. So I think across the board, there is significant value in this sector. And probably, I think just in case if we see reforms on that count, I think that could provide a significant re-rating for the sector as well.
Pankaj, what about stories like Reliance? I mean, it's almost the last one along with HDFC Bank to participate in this rally. But do you see a meaningful move after maybe this week?
Reliance, meaning given the size and scale, obviously it can only move at that pace. But I certainly see, because all the businesses are firing. If you see, retail is doing pretty well. On the telecom side, the expectations are very high. Probably we should have a tariff hike sooner rather than later, because it was supposed to happen last year and it's been postponed for almost pushed back by almost a year. So I think we should see rate hikes in telecoms or tariff hikes in telecoms, and Jio should be a big beneficiary of that. Reliance is making significant investments in new energy in their traditional oil and gas business, where they're transitioning the business. So I firmly believe the businesses are really firing. All the businesses are firing, and it should do well, reasonably well. Having said that, in a strong growth cycle like this, there are obviously smaller companies which can grow at a much higher rate because of the smaller base, and given Reliance's large conglomerate nature. But I still think the stock, while it has underperformed Nifty over the last year and a half, I think from here on the stock will at least deliver index performance.
Last question from my side. Pankaj, what's the best space to perhaps book some profit right now? Real estate, autos, what comes to mind if you have to do a bit of a sector churn? Where would you take the money off the table from?
Well, why should one take money off the table? It's time to put money back into the table. Just think about it in the context that this government now is starting its third term, when Indian economy is about $3.6 odd trillion. Now that we have visibility on 5 years of stability and 5 years accelerated growth, the global environment, global macro environment is fairly supportive in that sense, context. Probably by the time this government finishes this term, India should be an economy which will be closer to $7 trillion or $6.5 trillion. In that context, market should do well. Having said that, even if one has to take some money off the table, probably I would say consumer staples is one where one should go underweight and probably reallocate that money to some of the faster growing sectors or companies within those sectors.
Right, Pankaj, we'll let you go on that one. Thanks so much for joining us on this interesting day. That was Pankaj Murarka of Renaissance. But CA Rudra is also staying with us right now. Rudra, how would you take the trade for rest of the 20 minutes of this session? Is taking a BTST trade or a calls is too brave or should be avoided? What's the strategy now? Rudra, can you unmute yourself?
Yeah, Ajay, buying now calls or puts for the event tomorrow is not advisable, because VIX has already started falling and you will see further more correction post the event. I will not advocate buying either a straddle or strangle, that is where you buy calls as well as puts for the event, or even either going only with call also. Right now, the risk reward definitely doesn't favor, keeping in mind even the cooling off of VIX, which will happen post the event. So right now, my call is definitely to book profits if you are a short-term trader. Yes, you have made a lot of money now, and let us wait out for the event tomorrow and then take a fresh call. However, if you are a long-term investor, nothing to worry. I fully agree with Samir as well as Pankaj, where the next 5 years of India shining story is definitely on. And quickly for my BTST call, I'm looking at buying sale, looking at initial target of 170 with a stop loss of around 163, and I'm having one sell call. You can sell it in futures. HDFC Life looks weak. Even in today's market, the stock is not participating and it is trading below crucial support zones. Looking at initial targets of 540 on HDFC Life and have a stop loss of 557 for this short call.
All right, stay with us, Rudra. Deepak Shinoy is also joining us. Deepak, first of all, how's the rain situation there? We hear that it's like the worst you've seen in a very long time. I hope everything's okay at your end.
It is where I think the news kind of highlights the probably some extreme areas, but where I live and work, there seems to be no issues at all. I was stuck, of course. I come from out of station yesterday, so I was stuck in traffic because of the rain. But then in Bangalore, not being stuck in traffic is news. So, so I think just business as usual. I don't think it's the beginning of the real rains yet. So we might hear worse news going ahead. This was just the starter, I think.
In fact, Rudra is smiling. He's also from Bangalore. Deepak, how's the portfolio doing? Have you booked profit or just holding on to all the gains so far?
No, we've been fully invested. Honestly, we continue to be invested. Very difficult to buy right now because everything's running up so fast. But all the stocks we have, we're actually adding on to some of the positions as they are, considering they're much below where we think they will go to. Overall, strong moves right now. I think. I would like to say it's the GDP. It's probably more politics than it is economics right now. But hopefully we'll get to know tomorrow what the real situation will be. All the doubts or whatever will be cleared, and then we'll focus more on policy rather than politics.
Okay, point taken. So that's a view on the market. Hold that thought, Deepak. Let me take it across to Kunal as well. Kunal, what's your BTSC trade right now? Would you recommend taking long positions for tomorrow as well and going home with that? And individual names, the likes of Reliance, SBI, what does one do at these levels?
Yeah, of course, take long positions. And the two stocks which I would highlight at current levels, one would be LIC India. I think that's a chart which is now starting to show signs of a multi-week, multi-month breakout over 1050 levels. So would suggest a buy with 1150 as a target, stop loss at 1000. And Ashok Leyland is something which has been doing exceptionally well. So would go long on Ashok Leyland. And I would look out for targets in the range of 250 over the very near term, stop loss at 230. And yeah, I think for the larger cap names, Reliance Industries, L&T as well as HDFC Bank, I think all three of them, they look attractive even at current levels. In fact, HDFC Bank would probably complete a major multi-week, multi-month breakout, closing for the first time, I think, above 1530 plus mark, and also confirming a breakout above 50-day moving average, 200-day moving average rather. So I think all three technical charts look very attractive on the large cap front.
Okay, those are some large cap ideas coming in from Kunal, and I think the clear messaging is continue going long on the market. But Deepak, looking at the screen today, some of the oil and gas names are holding up. Adani names have been doing well since Friday. I can see PFC, REC give a fresh move up. Where is it that you're feeling FOMO or felt like, you were underinvested? You should have bought more of it.
I mean, if I had cash, I'd probably buy more. We were almost fully invested, very little cash really, so can't complain. But of course, yeah, we have PFC and REC now momentum portfolios, which is not really fundamentally driven, but the prices themselves have gone up, I think 4x now, more than 4x in the last year and a half. LIC is one of our largest holdings. That's done reasonably well. I think I would in fact continue to add there. Regardless of where it is right now, I still think there's a long way ahead. I think oil and gas wise, we have some BPCL. Again, this was on the back of relatively, there's a bit of an inflection point change for some of the refining companies, especially in India. I think they will probably get more profits because oil prices have stabilized to some extent, and then refining margins will come back. But also because the government focus on trying to perhaps set these companies up again for disinvestment going forward. The bigger thing over here was, I think now we'll have to wait for the budget to see what happens. The government should have a full set, their coffers are full with the RBI dividend or surplus being 200,000 crores rather than 100,000. Hopefully they don't need to do some capital gains tax and spoil the party. But in general, I would say, positive on some of these companies where the valuations are much lower than their private peers like PFC and REC, and the fundamentals have increased or improved substantially.
Rudra, one pocket which is underperforming today is clearly pharma. All the sectors are in the green, but pharma is clearly on the back foot with the likes of Fortis, GSK Pharma, Marksans Pharma all being in the red, Jyoti Labs and the other names as well. What's the trade within pharma right now?
See, for me, yes, today it is only the high beta which is doing great and defensive like pharma, or even if you take larger stocks like HDFC Bank, these are all not stocks which are doing great compared to 8 to 10% kind of a rally what you are seeing in PSUs. But however, keeping in mind from now on the future, yes, pharma is one sector which can do good for long term. IT also can perform very well. So from pharma, my two top picks will be Sun Pharma at current level looks very, very strong. Somewhere somewhere at around 1400, 1430, one can definitely look at buying Sun Pharma. It is now consolidating for a long period, which is about 5-6 months, and then post this consolidation, yes, stock can go back to its all-time highs are at around 1550, 1600 zone, and further from there it can perform well. And the second pick for me from pharma will be Dr. Reddy. Even this stock looks very strong to me. So if you want to buy from pharma, yes, Dr. Reddy at current levels of around 5800 looks very, very attractive. Strong supports are there at around 5750 zone. Risk reward is favorable at current levels to enter these stocks. So for me from pharma, Dr. Reddy and Sun Pharma looks very strong. And if you want to pick from IT, I like Wipro as well as Tech Mahindra. So someone who wants to build a longer term portfolio at current levels, yes, look into pharma and look into IT.
Oh, that's a contra call coming in. I want to talk about a section of the market, Kunal, which is kind of a proxy to manufacturing, and that is the bearing companies. Schaeffler and Skipper, both of them, one is bearing is clearly manufacturing ancillary, the other is power ancillary, but both have shot up today. Is it backed on volumes, and can you tell us? So where does the chart tell you?
Yeah, I looked at Skipper's chart and on an intraday basis when it was up some 10% or so. I think today, so far it's up 11-12%. Both the charts are completely different. So I think Skipper, for example, is trading closer to the life high levels of 400. And I think the recent correction had got the stock back towards 300 odd mark. So it's come back to the 320, 330 mark, which is closer to the all-time high levels. And today's move, of course, is backed by decent volumes for these stocks, not as high as compared to the last 2 months where we'd seen the volumes jumping up hard. But then nevertheless, I think when you compare this with the last 4-5 days of the price action, where there was a correction for these stocks, the volumes are far more better for these names. Schaeffler, on the other hand, I think would be interesting because that stock is still trading at, I think as a price adjusted value, it's still trading at a moderate kind of a zone for itself at 4,500. I would believe that the stock can still come back to the previous size of 4,800, 4,900 plus mark over the very near term.
In fact, those power ancillaries remind me of Polycab, because I think that was one stock, Deepak, you had booked out of. Did you find an alternative within the wires and cables segment? Because that's been firing up. And the second thing I want to discuss with you is wind energy, because of late there have been a couple of initiations. After November today, Morgan Stanley initiated coverage on Suzlon and they had a target price close to 60 bucks. Are you looking at these two pockets, wires and cables and wind energy?
Wires and cables, we got out of Polycab because of whatever they had in the income tax raid that happened then. Of course, the stock is kind of doubled or so since then, but then no regrets because we got into other stocks that have done equally or better. But yes, I mean, that remains a space of attraction. I think, if I were to generate cash, they're part of my opportunity set to look at. Also, on some of the other spaces, I think the idea here is power in general is interesting. Wind, I mean, Suzlon has had its share of issues in the past, and I think that has kind of marred my view about it because it's always full of surprises. Something will come up which you didn't anticipate in the past. So I might give it some more time, wait for the annual report to see how things actually are, and then look at things. But we haven't looked at it for a really long time. More focused on the transmission space, in the transformer space. Companies in that seem to be relatively more attractive than the wind power generation space or even the solar generation space. So, I'd put that as second on the line for us. I'd rather look at the manufacturers of equipment for the transmission companies and so on in a bigger way right now.
Well, look at the Nifty Bank. It's already hit that 51,000 mark. SBI is now clocking gains of nearly 10% as we speak right now, pretty much around the session highs. On the futures, of course, is hitting a 9% gain mark. There's Axis, which is higher by nearly 5%. There's ICICI Bank up 3% right now in trade, and HDFC Bank as well. It's these four stocks. And well, let's not forget Kotak, because that's also giving you a gain of nearly about 2% right now. Deepak, you think one can still increase exposure to some of the private banking names and ex-ICICI Bank, because that, I guess, has already run a fair bit?
Honestly, I'm still with ICICI Bank. I think that's the strongest of the pack. HDFC and Kotak, while attractive on pricing, there is a set of fundamental issues, and we've owned some of these in the recent past, but kind of gotten out because we want to wait till some of the air settles. HDFC Bank has, we will probably look at the real numbers from it after the merger only in the June quarter, because after the June quarter, because July last year is when they actually merged. So there's still some issues with that, merger. I think we will see a lot of those issues crop up over the course of the next, maybe I think 1 or 2 quarters only left. Kotak has deeper issues. I think they'll have to solve for the regulatory impact of what has come. They can't open new accounts online. They can't use their app to proliferate. They've been using it quite meaningfully. So I'll hold off on those. But some of the private mid-sized banks, they might still be interesting, especially if the screws on the NBFCs are tightened as much as RBI seems to be doing. There might be some of a more movement towards the mid-cap banks, and those are kind of interesting from that perspective, especially if there are no major credit issues in many of them. Whether it's Federal or IDFC, we'll have to see how they respond. But I would be interested in that space rather than the HDFC and Kotaks. And for the large caps, we still have ICICI, so very biased. I think they will benefit the most, even if there is an NBFC issue.
Fair point, but the Bank Nifty right now is up 4.25% if I have it right. It's the biggest intraday gain that we have seen since February 2021. In fact, Ansh had helpfully pointed out this data for us. So let me take it across to him to get a gist of all the market mood right now. Ansh, tell us which are the big price volume buzzers. What exactly is the FNO snapshot telling you?
Right, so let's start with Ambuja Cement, as the stock seems to have given a good breakout from its reverse head and shoulder chart pattern, and the stock has also touched record high level with volume of around 3 times its average trading volume of last 30 sessions. Also, Godrej Property is in focus as the stock has actually given a breakout from its cup and handle chart pattern, and even this stock has touched record high level with good volume of over 3 times its average volume of last 10 sessions. Power Finance is also in focus as the stock was consolidating within a range of around 5 to 6 sessions, and today it has given a decisive breakout from that consolidation pattern, and even this stock has touched record high level with volume of over 2 times. Also, if you check the stock on a broader basis, then the stock is up around 25% in last 1 month. Lastly, GAIL will be in focus as the stock has actually given a breakout from its reverse head and shoulder chart pattern where it was stuck by more than a month, and it has also touched record high level with volume of over 4 times its average trading volume of last 20 session. So keep an eye on the stocks.
Right. All right. Thanks for that. Rudra, look at that 51,000 reading on the Bank Nifty. PSU banks, do you think may continue with the momentum in the medium term despite of 8-10% moves?
Definitely, as a short-term trader, I will not enter fresh here. You can definitely hold them if you have, but I will not make a fresh move either, expecting another this kind of a move and enter fresh in SBI or Canara Bank. But then if I have position, I will hold on. Still, SBI can reach that 4-digit mark of 1,000 rupee. And yes, Canara Bank, PNB, Bank of Baroda all look better. And in terms of private bank, I still see value in HDFC Bank and Kotak Bank at current level. So my choice will be SBI as the top pick from PSU Bank at current level. And if I have to buy from private bank, it will be HDFC Bank. But as a short-term trader, here I will not buy because risk reward is definitely not favorable to enter here because your stop losses will be way far down from current level if you want to enter here.
Okay, point taken. So these are the big bets coming in from the banking sector despite the kind of big up move that we have seen. But Kunal, what's the next checkpoint for the Bank Nifty then? 50 and 51,000 both have been achieved in a matter of 1 day and a few hours. What's next for the Bank Nifty?
So I think logically we should now be looking at 52,000 as the next bet for the Bank Nifty. That becomes the round strike, the next round strikes. Let's hope so. But I think looking at the speed, of course, we can expect that maybe over the next couple of days. But somewhere down the line, so if it happens tomorrow, then I think it could be a very good time to actually cash out on the Bank Nifty, at least over the very short term, and then look out for buying these stocks at least a 5% correction further.
So which is the strongest sector as per you in terms of chart? What looks the high conviction buy idea right now?
PSUs as a sector looks very attractive. Now, if you ask me about the other sectors other than PSUs, I would believe auto is the other pocket which is looking fairly attractive. Look at the likes of M&M, Maruti. I think Hero MotoCorp, etc. Bajaj Auto is up some 3.5% today. So I think many of these stocks have done exceptionally well. That's a pocket which looks attractive. Private sector banking names, I strongly believe, are making a very strong comeback for themselves. And I think this time around led by Axis Bank, which is the first private sector banking name, which has made a fresh high for itself, followed up by the other private sector banking names like HDFC Bank, ICICI, etc.
Among autos, you spoke about Leyland, right? Deepak, I want to talk to you about Leyland because out of the CV, out of all the auto numbers coming out this time, CV related names actually did best. And some of the brokerages now believe that H2 is when the CV cycle may revive meaningfully. Would you play names like Escorts, Kubota or even Leyland? Do you have anything in the CV side or maybe a CV financier for that matter like Chola?
So yeah, I think the financiers have run up quite a bit. So maybe from a valuation perspective, they're higher than perhaps the growth, even which is, if it is strong, would indicate. But yeah, the manufacturers, I think there is reasonable. I mean, there's even Tata has a reasonable size of CV. There is also Mahindra, but Mahindra has a bunch of other things as well. We own Mahindra. We don't own Ashok Leyland or Tata Motors. But I think the cycle needs to turn at some point. We're seeing a lot of activity. I mean, I was on the highways and you're seeing enough trucks out there, but that's just anecdotal. I would say more important is when the logistics infrastructure continues and moves into the next phase of containerization for CVs, that will be an upgrade because the dedicated freight corridor will require containers to be transported. That part of the growth cycle hasn't yet started. I think that will be next, but that will probably start in 2025. In anticipation, we might want to take some of the positions here, but again, there's no clear winner. Leyland or Tata will benefit, no doubt, but I haven't taken a position yet. Probably still wait to see how things are. I haven't seen yesterday's CV's numbers, but it might be an interesting time to look at them. Maybe in the next rebalance, we might consider some of these players, but right now, I have nothing. I have nothing other than Mahindra.
Okay. Deepak, great to have you on the show as always. We'll let you go on that note. Rudra, good to speak with you as well. Kunal, before we wind up, just one stock idea for tomorrow. The first trade that you think you will execute looking at today.
Axis Bank.
Axis Bank, yeah. Buy more.
Buy more.
Buy more. Okay. We'll quickly hand it over to Vinny as well. In fact, it's been a magical day to say the least. So let's take it across to her and wrap up how the day has been. Vinny?
Absolutely a magical day, and let me just mark the Nifty Bank first because 51,000 is what the Nifty Bank is trading at for the first time ever, and that's what build up on the momentum through the day, and Nifty Bank closing with gains of almost 0.4% in gain in today's trade. Let's move on and talk about the names that are buzzing in Nifty Bank today. So yes, all the names, whether you look at an SBI, Axis Bank, IndusInd Bank, HDFC Bank, all of them holding on to very, very strong day today and a strong move today from the banking side. So yes, Nifty Bank, Nifty Realty, Nifty Energy as well as PSU banks are among the top gainers. So yes, we're keeping an eye out on that, while Nifty also obviously did see a gap up opening, but by the end of the day also is managing to hold on to gains of almost 3.4% in trade as of now. 23,000 levels, 23,200 levels, build on to some bit of the gain again in the second half of the day. That's how the Nifty was managing to hold on to strong gains a day before the Lok Sabha elections that we'll be seeing tomorrow results. So yes, we're keeping an eye out on the Nifty. Surely a strong up move we saw in the markets today after the exit poll. Other than that, let's pull up the Adani Group names. Those were the ones which were buzzing in trade. So Adani Ports, Adani Enterprises, let's pull those names because they were surely among the top gainers and movers in trade today, adding a decent amount to the market cap for the group. Other than that, we did have the PSUs, that is the NTPC, Power Grid, ONGC, all of them also saw very, very strong gains, while BPCL also managing to hold on to gains. Let's pull up the big boy Reliance because managed to hit record high levels, and Reliance also trading with gains of almost 5.8%. So a strong up move that we saw in Reliance as well. Reliance surely, and other than that, the PSU banks also gained the highest level since 19th of September. 2013. Surely been a very, very, very exciting day today on the D Street, where the individual movers in trade, everything, most of it was trading in the green, except for some of the names like Ipca Labs, that from the FNO space was among the top losers today, buzzing a bit subdued in trade, down 2.2% in trade. Other than that, all Nifty index stocks added almost 6 lakh crores in market cap today. That's the latest data that we have, and surely has been a very, very exciting day on that front. Other than that, Bank of Baroda, that managed to cross a market cap of 1.5 lakh crores. So all these PSUs had been very, very strong, whether you look at a GAIL, REC, PFC, very, very strong moves coming there, and a very exciting day. Let's wait and watch where tomorrow's day, where the markets are headed tomorrow.